Let's dig into Nvidia. Call it Nvidia's AI-driven extravaganza. The chip maker surging after blowing past even the most bullish of expectations with first quarter earnings. That stock tells the story of an artificial intelligence boom and one company at the center of it all. Demand for AI chips like the H100 rocketed, with data center revenue up almost 15% on the year at $4.3 billion. Now, the move further propels a stock that had seen an astronomical 109% surge in the year before the results hit. Speaking on the earnings call, CFO Colette Kress summed up the demand story.
We have some significant supply chain flow to serve our significant customer demand that we see. And this is demand that we see across a wide range of different customers. They are building platforms for some of the largest enterprises, but also setting things up at the CSPs and the large consumer internet companies. So we have visibility right now for our data center demand that has probably extended out a few quarters.
All right, joining us now for analysis is Srini Pajjuri, Raymond James Managing Director and Senior Analyst. All right. Let's get right into Nvidia's latest results. What was your first takeaway?
It was a stunning quarter. I mean, we've been covering the semiconductor space for about 20 years, and we have never seen a quarter like this. Our expectation was that the quarter was going to be strong. We thought if they beat the guidance by about 5%, that's good enough for the stock to stay where it is, but they're beating guidance by consensus by 50%. We rarely see it for a company of this size. The incremental upside here is about $4 billion, and most of that is coming as expected from data center segment, which is roughly about 70% of the mix. But the interesting thing about it is that, it doesn't seem like it's a one-off. Management seems to have visibility into the second half, and there's a war going on out there in AI, and Nvidia today is the only arms dealer out there. So as a result, we are seeing this huge jump in their revenues.
Srini, I have so many questions for you. Let's start on the AI front. I mean, ChatGPT just came out, 6 months ago, right? So right. I'm trying to wrap my head around why it seems like there's already so much sales flowing through to Nvidia that are a result of this. And maybe on a related note, how many of the chips, what percentage of the company's revenue now can you say is directly sourced to AI?
Sure. AI has been around for many years, right? I mean, if you kind of look at some of the consumer applications, we have had Siri and Alexa for a while, Google Photos. But I think this, what we call the generative AI, ChatGPT, it creates content. There are so many applications. It's viewed as the first real killer app. And, the enterprises, and there's so many applications out there across so many industries. And what the hyperscale cloud companies like Microsoft and Google are realizing is that, they will lose competitive advantage unless they take the lead in generative AI applications. So as a result, as I said, it's a war out there, and everybody's scrambling to put out their generative AI products. And as a result, right now there's only one supplier of GPUs, and Nvidia has been investing in this market for the last 10 years. They not only have the chips, but they have the systems, they have the software. So it's a full stack solutions company. So to answer your question, as I said, data center segment is roughly 70% of Nvidia's mix today. I would say, more than half of that is directly related to, ChatGPT-like applications today.
That is incredible, Srini. Because it is such as you say, AI has been around for a long time, but ChatGPT has not been around for a long time. So that's just an incredible boost. Right. Nvidia has been really good at catching waves, right, at various times. Caught the crypto wave, right. Caught the gaming wave, caught the metaverse wave, right? We heard about its Omniverse a lot last year around this right. time. How do we know that this wave is not going to crest and crash like some of those prior waves?
Yeah, it's a great question. We get that question very often because of what we saw with crypto and even metaverse. But this does seem real because, if you look at the applications, the potential of generative AI, early on, it's primarily targeted towards customer service type applications, but it's going to boost the publishing industry. It's going to boost even the movie making industry and the healthcare industry, and there are so many applications, and it's so early, and that's the reason I think we are seeing these big cloud customers, spend, the way they are spending, and this is if you look at the macro backdrop, the overall cloud spending is coming down. But the generative AI spending is jumping, there's no tomorrow, essentially. So it does feel real, but again, it's early days. We have to wait and see how long this sustains. But at least for the next 2 to 3 quarters, we feel very good about Nvidia's prospects, and we also see this benefiting some of the other chip suppliers out there.
All right, Srini, you did mention the macro environment, and just about any company has to deal with macro headwinds. But let's talk about kind of one headwind specifically that would apply to Nvidia, the slowdown in the gaming industry. Do you see that as any cause for concern, or are there any headwinds that you see that could be cause for concern when it comes to Nvidia?
Yeah, look, macro is always a concern, and gaming primarily they sell to, the consumer market. So, that does get impacted. But the good thing is that, they have seen the worst, late last year because of the crypto bubble bursting, and they're coming out of that, trough. And on top of that, they also have new products. So every time they have pricing goes up because of the higher performance that they offer. So that is been a tailwind. So as a result, even that gaming revenue is recovering on a sequential basis, and our expectation is that as we go through the seasonally stronger second half, we'll see more growth out of that business. So overall, we think that that probably grows in the low double-digit rate, but data center is where most of the growth is going to come for Nvidia in the next few years.
Srini, you mentioned that this is a one-horse race at this point. This is the only company that is making these GPUs for these generative AI applications. So does that mean you just buy Nvidia and forget about everybody else? Where are there some other opportunities in chips that people should be looking at related to this new wave of AI?
Right. In the short term, Nvidia is the only game in town. And as I said, everybody is scrambling to put out something as quickly as possible. And, but longer term, you got to think about, the cost and, the investments are going. If you look at the infrastructure investments today that are going into generative AI, we don't know if it's sustainable. So obviously the customers will look for alternative sources. We would say that in our view, AMD is the second best positioned company in the space because they also supply GPUs. And if you look at their market share in PC gaming, it's roughly 25-30%, and in AI, it's close to zero. So it's only natural to assume that they will make progress, and they have a new chip coming out second half of this year, and we're pretty optimistic about their prospects. And then we keep hearing about the big cloud companies trying to develop their own in-house silicon, what we call custom silicon. And one of the reasons, is they want to differentiate, because if everybody's using Nvidia, what's your differentiation? But the other reason is also on because of the cost issues. Nvidia's chips today sell for $25,000 a piece, their latest generation chip. By designing these chips in-house, you can reduce that cost pretty significantly. So, when the market moves to designing a custom silicon, there are two companies that come to mind, because you still need help from chip companies to design these chips. One is Broadcom, which we rate as market perform today, and they're already supplying to Google. And the second one we actually like is Marvell. They're very early, and they have all the expertise to design these chips, and we do expect their business to pick up in the next few years. So those are the two names that we would highlight.
And then finally, one last question on NVIDIA. On the call, Jensen Huang mentioned and teased perhaps another product introduction at Computex in Taipei, which I think is coming up in a week or two. Do you expect that to be yet another big announcement and cause another leg up in the stock? It was hard to even imagine what we're seeing today.
Yeah, look, Nvidia, as I said, it's not just a chip company. They're a full stack solutions company. What that means is that, they make the chips, but they also make the subsystems, they make the systems, and they also supply full software solutions. So, one-stop, AI shop, essentially. So they're adding to that portfolio. So I'm not expecting, I'm expecting the announcement to be incremental because they're already so big in AI. And it's great to see that because, again, that's how they protect their moat, because they've built a very strong ecosystem, and that's the reason, as to why they're doing so well. And they have to continue to invest, and that's what they're doing. And it's great to see that them do that.
Srini, really great insight. Thank you so much for your perspective on this as Nvidia climbs 30% this morning. Srini Pajjuri, Raymond James Managing Director and Senior Analyst, thank you.